Boom, we are alive, ladies and gentlemen. Thank you for joining us today. This is Tio with the Arcane Bear. It's been a few days, almost a week over. I'm going to take a look at Bitcoin, Avalanche, Fetch, the dollar, the S&P 500. I'm going to make some larger technical focuses again today, as I think the bull market is still kind of just getting started. There's some real reason to believe we've got a lot more room for upside ahead. But let's start off with our longer look at Bitcoin. So here right now, we're looking at the daily, and if I zoom out just a little bit more, you'll be able to see the two previous peaks of the last all-time highs. Now, for those of you that are new here, we've talked about something called scale invariance. This means that regardless of the scale, you will find the same pattern and function that repeats over and over and over again. You can find this commonly in nature. If you want to look it up on the internet, it's a fascinating thought, both in physics, mathematics, geology, biology, a ton of different elements of life, but it also extends to our little world of trading and investing. So for those of you that have been doing your homework, you will have been studying accumulation ranges. So if I zip over here, we have reaccumulation and accumulation ranges. At the top a little bit here, let's take a look at this one because it was the most similar to what we saw with Bitcoin, accumulation schematic 2, where phase C as a spring effectively never comes down to touch the bottom of the box again. So here we have phase 2, and then phase C, the spring, never came down to touch the bottom of the box. Now, we could make an argument here. Generally, I look for springs to have this significant volume signature or supply signature. We've seen this many times before throughout our charting history. But I would actually make an argument for phase C being a little bit later in this process here. Now, again, we could get into some technical debates about the volume and the supply signature, and if this is a low volume spring, which often occurs in these accumulation schematic 2s. But I want to also then focus on this, which is this secondary reaccumulation range that came out of the back of the trading range for Bitcoin. And this is what we're seeing in much of the market at the moment, is reaccumulation schematics. So once you have a completed bottom of the box, you jump up into an SOS and form a new reaccumulation range. The fact that we formed a secondary reaccumulation range outside of the back of the box for Bitcoin is extremely bullish. And for those of you that have also been doing your homework, we have at least 280 days with inside the box, plus another 250 days into the reaccumulation channel itself. When you see accumulation schematics that take this long to form, you can usually assume that you're going to have at least half of that time in momentum upwards. Now, it's not all straight up during that process, but it can feel that way. In fact, 250 days is a long time, and we've just started that. So for good measure, let's take a look at where we are here at the moment. 45 days into this bull market cycle, if you focus on just the leaving of the secondary trading range or the first and primary sign of strength, or also known as SOS. So if you guys are interested in studying this stuff, remember that the sickness of the average investor comes from overtrading and lack of education and just no solid community around them. So the best way to cure that is by joining a group of people who know what they're doing and are constantly focusing, growing, and studying. Now, we don't give out any signals. We share our own trades, the ones I'm making, but more importantly, we want to teach you how this stuff works. So it's a no-risk guarantee. You can go to arcanebear.com/private, sign up. If you're not happy, we'll just give you an instant refund. We get very few people that aren't happy. Although we do have one or two people who are like, well, I thought this was a signals group. No, it is not a signals group. You don't want to just give a person a fish. You want to teach them to fish. Once you know how this works, you will have an extremely profitable tool within your tool belt for the rest of your life. You won't learn it overnight, but you will figure it out eventually, and it's extraordinarily valuable. So currently, I believe we're in an SOS for Bitcoin. Now, we've seen these before. They're called a rising gradient bottom. They're extraordinarily bullish. Now, again, we could make an argument that for the bottom of the range actually being somewhere down here and the top of the range being approximately somewhere up here. There's nothing wrong with this, but I'm actually going to make an argument for something that actually looks like this, which is called a rising gradient bottom. We have variations of this in our accumulation schematics. In fact, schematic 2 here where we never touch the bottom is very similar. Same with even in just accumulation schematics. If you don't touch the bottom in phase C, it's a very bullish indicator. But more importantly, this rising momentum right now, I think is going to continue. And we're just kind of at the last final moments of it here, marked by this green line that I've dropped on the chart. So as I've said, approximately since $22,000 Bitcoin, after we had this nice spring and test area, I think we're going to go to at least $42,000, maybe even as high as $48,000. So my next targets, my next little happy face TO targets are up here at around $47,000. I think we rip to that before we find a final kind of retest. Now, something else I wanted to go over here with Bitcoin is what's known as a rising or a widening megaphone pattern. So if we go over to Google here, and if you've done your homework even more, you'll know who Jesse Livermore is. He's got a great book called Reminiscence of a Stock Operator. I highly suggest reading the book if you've never done it. It's a fantastic story. It's written like a story. It's not a technical terms about trading, but it teaches you about a lot about emotion and market timing, and it's one of the stock operators' classic novels. So Jesse Livermore and Livermore megaphone pattern. This is a pattern you see all over the place, and I want to show you where it's happened in the past. So here's the widening, open image in new tab. There we go. The widening megaphone pattern by Jesse Livermore. So this is what we're comparing it to now. We have a 1, 2, 3, 4, 5, 6, 7, and we've already completed phase 5. I think we run up here to around phase 7, up around 57,000, and then come back down to form a larger trading range, probably between 42 and 37,000. And that should take about a year approximately before we see a massive Bitcoin bull market, one like we've never seen before potentially. So we have yet to create 0.6 and most importantly 0.7. So just as a future kind of hint of how I think this will go, I think we're going to see a new trading range take place that looks like this. And what we're actually witnessing right now will become the primary support for this much larger out-of-the-box trading range. We've actually seen this in Bitcoin's past as well, and this was an extraordinarily bullish moment. I'm going to draw it out here for you. You'll start to recognize it as soon as I do it. We had a rising megaphone pattern, very, very similar to what we're witnessing today. Boom, there we go. So, you know, there's again, we could make a few little subtle arguments. There's not the only place we've seen this too. So we had points 1, 2, 3, 4, 5, 6, 7. Oh, sorry, I drew that backwards. 1 starts here, by the way. 1, 2, 3, 4, 5, 6, 7. Boom. And notice as well that this point here, 0.6, actually stayed below the range. So where would that be for Bitcoin? That would be around 44,000. So we could see it jump to 44,000, come back down, go up to the 49, and then continue its bull market cycle. So somewhere between 44 and 48,000 are my next targets for Bitcoin here. This is a very powerful pattern. I'm just going to quickly skip forward into Fetch to kind of share this dynamic, because we saw this in Fetch's past, and these are monumentally powerful moments. So back in 2020, when everybody else was super scared of a fictitious thing that was going on, where the governments are trying to take over the world through indoctrination, we saw this pattern here. A beautiful rising megaphone Livermore pattern, completed all 7 points. And when it moved, not only did it move up with a speed and veracity that was hard to imagine. I think there was at least so you can barely even see the Livermore pattern once it completed, but let's just for fun measure to the top. That was an easy 60 to 100x for some of this position. I closed out a lot of it too early after having still some bear market downside vibes. And during 2020, we saw a quick 10x out of this position, and I closed most of it out, forgetting that there was another 100x afterwards. It was very difficult. But those are very powerful patterns. When we see these rising megaphone patterns coming out the bottom of again, what might be the spring, or at the very least, the spring that happened in phase B, because it's maybe a rising gradient accumulation box, and the SOS just finally starting to take place now. We move all the way to 49 44,000. Anyone that thinks otherwise doesn't know a whole lot about how the market works. I'm very confident about this, equally as confident as I was in 2020 when I was trying to tell everybody I knew, get in the markets now because blood in the streets is extremely bullish. As a matter of fact, just for fun, or kind of not fun, but if you look, almost the day that this market cycle started is on October 7th. Now, I don't want to reminisce too much about what October 7th was, but right around that time, as more blood started to enter the streets, the market goes up. This is an age-old adage for a reason. Buy when there's blood in the streets. That's a literal and figurative speech marker. It's not just figurative. Took me a long time to learn that. It's not very fun. It's part of the sociopathic mentality that goes along with being in the market. But once you know that, you can make a lot of money understanding what's going on in the market cycle. Okay, I wanted to share this because currently Avalanche is creating a beautiful reaccumulation range. If I jump over to Fetch here, we had been charting this in our private members group. We had a beautiful reaccumulation range outside of the back of the box. We saw its primary SOS and backup phases. And from the primary SOS to where we are, we had a 60% run in Fetch while Bitcoin has stayed largely sideways. These are extraordinarily powerful markers. And right now, the same thing is happening inside of Avalanche. So I've marked it out here very nicely for you. Again, if you want to study more of this, there is some of it for free on the internet, but also available in our private group. We've got PDFs and people that are constantly sharing and growing, a peer review area where people can help you figure these things out. But more importantly, mark this. Take a screenshot of this right now, because once we jump above this blue line I've got marked out, it's very likely Avalanche is going to run at least to $30, if not much higher. I suspect we could see them. Let's just zoom out here on the daily so we can get a better perspective. The other fun thing here, I think, to note is our relationship between these two. So this is an accumulation schematic 4. This is what a lot of traditional traders call a falling wedge. Notice the falling wedge through the horizontal trading range. We only focus on horizontal trading ranges. These are the most powerful ways to look at the market. They reduce the risk and increase confidence, two very important things when you want to be in a position and when to enter that position without getting washed around in a trade for too long. So here we see a falling wedge into the bottom of the box, and the first primary breakout has only brought us into the middle of the box. And if you'll notice here, what do we get? We get a big back check right into the middle of the box for a lot of these reaccumulation schematic 4s, or what's known as a falling wedge. So here, right at the mid-range of the box, especially if we turn on the VPVR, which I'll do right now, you're going to see right there, boom, pretty much to the middle of the box. That's where our primary support takes place. And you know what's really interesting here is there's not a lot holding us back from this point. It's likely we could jump as high as $90. In between there's a few gaps that are around $60. Let me rephrase that. $38, I was not 100%, around $60, and then from there, from 60, a pretty clear run to about 120. Now, these are all stepping stone targets. There are a few different ways to get there. For those of you that are studying the P&F positions, those are really powerful. I don't like using them, although they do work really well. I prefer just to chart with regular schematics and go something like this, from the bottom of the spring to the top of the box. We can see our first range at around the 1.618 around $50, around 2.618 for 65, and the final range is around 102. We've constantly seen extensions like this for crypto in the past, and I suspect we'll see something similar again. So remember, we are in a much larger accumulation range, a falling wedge of schematic 4, back testing right now, the middle of the box, and as we zoom in closer, we get this beautiful, perfect, nerdy chart art vision of where Avalanche is right now, right at the center of the trading range, building up its new strength within this TR. I want to also point a few things out. Number one, both our shakeout and our spring are very similar in volume or supply strength. This is a very common indicator of the spring being completed. It looks like we had a secondary test of this trading range where we closed higher, but on a lower volume. Very, very important as well. The market maker is comfortable with where they are. This next step is called what's a jump of the creek. which we will likely see within the next week, where we jump above the $23 area outside, back test one more time, and then move into an SOS and backup phase and into the $30 to $40 range. So I'm going to look at Fetch here again. For those of you that are in the private group, I closed this trade out early because I had to take, I had some time booked off for like months more in advance. And if you got something booked in advance, don't get too stressed out. You can make a lot of money in a bull market, and there's more time. We're only 45 days into this. We're going to see this sequence that we're teaching you guys over and over and over again until the market cycle is relatively finished. As we just showed with Bitcoin, we're probably going to see a reaccumulation cycle between 42 and 50 something thousand dollars. I suspect that the rest of the market cycle will continue to complete during that process, where you'll see explosions in other assets like AVE. Some of our gaming tokens are already up 500x, but more importantly, understanding, if you've watched the previous videos, you will know that we were right here super excited about entries into Fetch, and there was a really quick 60% gain within just a few week period. Again, I think the same thing is going to happen to Avalanche that just happened with Fetch. So keep an eye on it. Lastly, I want to take a look at the dollar. We are in a pretty big range for the dollar, so let's go out. I'm actually going to have to go to the monthly for this so it can become clear. We've been in this rising range for the dollar for a long time. Again, remember, I don't really think that following rising trading ranges is important. It's very difficult to decipher them in the long term. So more importantly, notice on the left-hand side what I've done here. I'm going to do this again. I'll delete the rising range for a sec, aside from the bottom part. It appears that we had our spring for the dollar back in 2007. We've seen bullish momentum, an SOS, a backup phase, and very similar to Bitcoin, a reaccumulation schematic before a move up. Now, there's two things that could go on here. There's reason to believe that the dollar could go much higher. I think that the dollar is going to come back to back test this 100 point area first. I don't think it continues to move forward without touching that 100 area. I'll zoom in and share why in a second. There we go. We're not looking at distributions right now in the crypto cycle because we just finished an accumulation period, but this is what a distribution range looks like. We come back in, sign of weakness, not able to close back above the box before falling down further. I think we're going to fall all the way down to around 100. I think what you'll see is continual smaller distributions and then a final reaccumulation. I think that reaccumulation will likely coincide with this reaccumulation that we're waiting for Bitcoin between 0.6 and 7 as well. The S&P 500 is also in a very unique spot. When Michael Burry went short his 1.6 billion against the S&P 500, I made a video being like, this guy is wrong. Not just wrong and early, but right later, but actually wrong. I think a lot of big investors are going to make this mistake. They're relying on the dollar being a strengthening indicator. I think this is for the first time the dollar is just going to massively lose value after value after value chunk. So this looks very similar to what's known as a reaccumulation after decline. We've seen these before. So just for fun, because we're all studying the Wyckoff schematics, here's a reaccumulation schematic number 4, where you see a big peak out top, drop down into the box, 2 bang, 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 don't even come back down to touch the bottom. So again, this is what bang, 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 no, can't touch the bottom, and up and out of the box we go. And I suspect we're going to be moving into all-time highs for the S&P 500 within the coming weeks. This is also going to remain bullish for Bitcoin. Even if there is strength in the dollar, you're going to see people running from other countries as they start to fail, moving into the dollar's dirtiest shirt basket. So between the US dollar and the S&P 500, I think we're going to see new all-time highs for the S&P 500. Not because the market is strong, but because the dollar is weak. It's a very important thing to keep in mind. Anyways, this is Teal with the Arcane Bear. I hope you guys had a lot of fun today. Sorry it took me so long to figure out how to get my damn camera to work, but thank you to Canon for eventually answering my questions and helping me solve this problem. Leave your thoughts, your questions, your comments down below. Also, if you do want to join the private group, arcanebear.com/private, the links are down below. And remember, it's like risk-free. If you sign up and you're not happy, we just give you a refund, no questions asked. As long as you do it within the month. You can't do it at the very end of the month. You got to do it during the process. You're like, I don't like, I thought it was a trading signals group, even though you told me it wasn't one. And we're like, okay, cool. Our bad. We'll be clear about that next time. Anyways, Steve with the Arcane Bear, thank you so much. We'll see you guys again on the next episode because now the cameras work. I can make more videos again. Bang.